Well, it's finally here, well, almost. The European summit upon which great expectations have been heaped. Rumours and reports amped up overnight, with plenty of suggestions as to exactly what the ECB's plan will entail. Most expect the central bank to announce unlimited purchases of government debt. According to Bloomberg, the program could be called monetary outright transactions and could focus on government bonds with maturities of up to 3 years. Now, Larry Shover, Chief Investment Officer, joins us at SFG Alternatives. Larry, spell it out to us. What are you guys down there in the pits looking for tonight? Do you want to see this bond buying program come off?
You know, I think Americans here, especially in the pits behind me, are all looking for some type of execution plan. There's been a lot of talk. It started from the beginning of June, followed by the Bumblebee speech that was just a masterstroke of brilliance. But now it's time to execute. And I'm afraid that Draghi can only punt the ball a little bit further. He's going to have to come out with some type of clear-cut execution plan with which country is going to go first, what are the conditions, what are the collateral standards. If that is not pronunciated tonight or tomorrow, depending on where you live, I think it's going to be very, very disappointing to the markets, and we're going to see a risk-off downgrade tomorrow morning in the U.S.
So the details you're looking for, I mean, a short-term bond buying program, would that be enough to satisfy the markets?
You know, it might be if the details were granular level. I mean, it is true. Draghi does have until October to draw out a master plan. But I think the markets are depending on him to create some type of granular detail for us to just sink our teeth into, given the collateral standards, which country will go first, so on and so forth. So some bond buying program is good, but conditions, that's something people worry about. Are people going to sign up for that? So we will see what happens. It's unsettling at best to see what the markets have done behind me today.
Larry, what do you mean in terms of which country will go first? As in which country they'll buy bonds in first, sovereign bonds, or in terms of who'll, I guess, ask for a bailout?
Yeah, great question. A lot of people are wondering, is Spain going to ask for help? I mean, that's which country is going to go first. What's going to happen if they do? Are they going to be able to supply enough so that they have enough in their arsenal? I mean, their financing for 2012 is in good shape, but I think the markets are worried for 2013. The best case scenario is that Spain does ask for help, but the markets seem to be very, very quizzical on whether they will or not.
But that's up to Spain, isn't it? I mean, we're not going to hear from the European Central Bank as to which country will go first, will we?
No, not at all. But I think the markets are pricing in the fact that Spain will ask for help, much like some other countries did. If they don't, that's not a best case scenario. So attack the problem where it lies, inject capital where it's necessary, and let's move on with business.
Okay, do you think, though, we might get, I guess, or be a little short on details because we haven't had this constitutional vote from Germany yet? That comes later. I mean, they can't really announce any long-term bond buying programs until after that meeting. So could we be setting ourselves up for disappointment?
I do think we're setting ourselves up for some disappointment. I mean, recently, the last few days, I think the market has digested the fact that the ECB does have a month to figure this out. And so maybe if some granular detail starts to emanate tomorrow or tonight, however, wherever you live, the market might be satisfied. But we've been on hold for a very, very long time, and I think the market's starting to demand some answers. So just even the most minute detail will help the markets quite a bit.
Okay, but then what? Say we get a bond buying program, you get details, Spain asks for a bailout. Do you think we'll then be on track?
Possibly, but I don't think, given some of the other moving parts in the world right now, that, I mean, on track for what? I mean, we've had manufacturing around the world ratcheting down. We had the U.S. contracting 3 months in a row, followed by China. And unfortunately, my Australian friends have had some bad reports yesterday. So culminating that together with being on track, I think we're just setting ourselves up to fail right now.
Yeah, it sounds like it. I mean, US equity's so bullish at the moment. I mean, I know corporate profits were strong at the start of the year, but they're now slowing. It sounds like a whole lot of bad news, and the only thing you guys are running up on is stimulus hopes. Do you think that's the case?
I think that's exactly the case, and that's a great point. I mean, 20 years ago, markets rallied before good news came out because they were predicated on some type of economic stimulus being around the corner. Now it's like everybody's waiting for economic stimulus right around the corner, where the Fed's going to come to our rescue and figure this all out. And you're exactly correct. And it's really scary because you're right. I mean, earnings season, the second quarter was very good, but earnings are slowing. And one thing people have to realize that these earnings are coming at a huge cost. I mean, wage compensation in the United States on an inflation-adjusted basis is at a 50-year low right now. That simply cannot continue to go on forever.
Yeah, I mean, this whole stimulus thing, it's the idea is to pump things up until real growth returns, because you can't keep injecting cash forever. And no one seems to be talking about how this real growth is going to come back, which means about 6 months down the track, say we do get stimulus now, things are going to be looking scary again and we'll be back where we are now.
Yeah, exactly. I mean, at some point, the economy has to grow legs on its own. I mean, I'm sorry that raindrops fall downwards. There's nothing we can do about that, but we have to be able to grow legs on our own. We can't continue to rely on the Fed, the ECB, whomever, to pump money into the economy to make things better. I mean, our employment situation is a mess. Our ISM PMIs are still contracting. Those are real issues that are going to have to be dealt with. And until they are, I mean, I think the market's just rising on smoke and mirrors.
Okay, so how do you position yourself in this market then, Larry, in terms of commodities at the moment?
Well, I still think gold's an attractive buy, and I've been saying that all year long. I mean, in this world of continued easing, gold will continue to rally. Beyond gold, I would still invest in managed futures, whether it be a commodity trading advisor, some type of commodity pool, because I think we're in for what I call inverse stagflation. We're going to have a continued underperformance of paper assets and a long-term outperformance of commodities. It's just the way it's going to be. It's not something that you might make money on in the next 6 months, but 3 to 5 years, that's the way to be situated.
Okay, so what about the remainder? What about the more industrial spaces like copper at the moment? Do you see that they're on the way down with all these global growth concerns?
You know, copper has been a frustrating trade, and it's something I pay a lot of attention to. A lot of it, copper is being held up because the stockpiles continue to run short. We have an LME Shanghai arbitrage negative to the Chinese. So other than scrap, the supply is very short, and a lot of the copper supply is being held up in financing deals. So a lot of it has to do with what's going to happen the second half of the year. Will China stimulate the economy internally to create more demand for copper? If they don't, I can see copper falling quite a big correction from where it is today. But it seems like the market is basically pricing in the fact that China will do something and will hold copper up and maybe even reach new highs.
I'm not sure, Larry, how closely you watch iron ore. Obviously, in Australia here, we watch it really, really closely, and we've seen the spot price plummeting over the past few days. And I mean, it's down a huge amount over the past year. Are you watching that one closely, and what do you make of it?
Well, it's funny. Obviously, the American point of view is much different than the Aussie, and that's why I love talking to my Australian friends. It's like the Americans just assume that China is going to do something because that's what the Americans do. So that China is going to stimulate their economy and it's going to uphold the price of copper. I'm sure the Australians think quite differently about that and think about it this way. Imagine being an Australian importer, exporter, and trying to manage the expectations of your currency. It's been all over the map, and no one seems to know what's next. Is it going to be par with the dollar, or is it going to be 110, or somewhere in between? So from my point of view, from the American point of view, we do think China will stimulate and will prop up the price of copper.
Okay, thanks for your take, Larry. We do appreciate it.
You're welcome.